Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 29, 2025, and we're diving into the latest earnings report from the Bank of Montreal. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. The Bank of Montreal has just released its earnings report for the quarter ended April 30th, 2025. There's a lot to unpack, so let's get started.
Earnings coverage ratios. Let's begin with the earnings coverage ratios. The Bank of Montreal reported an interest coverage ratio of 24.63 times. John, what does this tell us about the bank's financial health?
This is a strong indicator of the bank's ability to meet its interest obligations. An interest coverage ratio of 24.63 times means that the bank's earnings before interest and taxes are more than sufficient to cover its interest expenses. This reflects a robust financial position.
And what about the dividend coverage ratio, which stands at 23.58 times?
Similarly, the dividend coverage ratio of 23.58 times suggests that the bank is well positioned to meet its dividend obligations. This is calculated by comparing the bank's earnings before tax to its dividend requirements, and it shows a healthy capacity to sustain dividend payments.
Operational performance. Moving on to operational performance, the bank's earnings before interest on subordinated indebtedness and income tax were reported at $11,338.81 million. How does this compare to previous periods?
This is a significant improvement from the previous period, indicating strong operational performance. The bank has effectively managed its operations to generate higher earnings, which is a positive sign for investors.
The report also mentions an average exchange rate of 1.3961 per US dollar. How does currency fluctuation impact the bank's performance?
Currency fluctuations can have a notable impact, especially for a bank with international operations. A weaker Canadian dollar can boost earnings from foreign operations when converted back to Canadian currency, which seems to have been beneficial in this period.
EPS forecast and actual performance. Let's discuss the earnings per share. Analysts had forecasted an EPS of 184 based on a survey of 4 analysts. How did the actual EPS compare?
The Bank of Montreal met expectations with an adjusted EPS of 184. Meeting the forecast is generally seen as a positive outcome, as it indicates that the bank's performance aligned with market expectations.
What does meeting the EPS forecast mean for the bank's stock and investor sentiment?
Meeting the EPS forecast can help maintain investor confidence and stabilize the stock price. It suggests that the bank's management has a good handle on its financial operations and can deliver on its projections.
Key takeaways. In summary, the Bank of Montreal has demonstrated strong financial health with impressive coverage ratios and met its EPS forecast. John, any final thoughts on the bank's investment prospects?
The bank's solid performance and ability to meet expectations make it an attractive option for investors seeking stability and reliable dividends. However, it's always important to consider broader market conditions and potential risks.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on the Bank of Montreal's performance in the comments below.